The Average Directional Index, or ADX, is a powerful technical indicator used to measure the strength of a trend. The ADX was developed by J. Wells Wilder, a prominent figure in technical analysis who created several influential indicators. The primary purpose of the ADX is to measure the strength of a trend, regardless of whether the market is moving up or down. It does not show direction, only how powerful the current trend is. The ADX ranges from 0 to 100. Readings below 20 indicate a weak or non-existent trend. When the ADX is above 25, it suggests a strong trend is present. Values above 50 represent very strong trends. Let's see how the ADX appears alongside price action. The ADX is typically displayed below the price chart, often with its component indicators. As we can see, the ADX line rises when the trend strengthens, regardless of direction. Here, the green line represents the positive directional indicator, or plus DI, while the red line shows the negative directional indicator, or minus DI. During an uptrend, the plus DI rises above the minus DI, while in a downtrend, the minus DI is higher. When the market moves sideways with no clear trend, the ADX typically falls below 25, indicating conditions unsuitable for trend-following strategies. The ADX calculation is quite complex, involving several steps. It starts with calculating the true range and directional movement components. These are smoothed using Wilder's smoothing technique to reduce volatility. The directional indicators are then derived as a percentage of the true range. Finally, the ADX itself is calculated by averaging the directional index over 14 periods. Traders primarily use the ADX as a filter to determine when to apply trend-following strategies. When the ADX is above 25, the market is trending and trend-following methods are appropriate. Traders can use larger positions and trailing stops. Conversely, when the ADX is below 20, the market lacks direction, making range trading strategies more suitable. To summarize what we've learned about the Average Directional Index, it measures trend strength but not direction, with values ranging from 0 to 100. Readings above 25 indicate a strong trend suitable for trend-following strategies, while readings below 20 suggest weak or non-existent trends better suited for range trading approaches. Traders should use it alongside the directional indicators to confirm both trend strength and direction.
Let's explore how to effectively trade using ADX and its directional movement indicators. The directional movement system consists of three key components: ADX, which measures trend strength, plus DI, which measures upward price movement, and minus DI, which measures downward price movement. A potential buying opportunity occurs when the positive DI crosses above the negative DI, especially when ADX is above 25, indicating a strong trend. At the crossover point, when plus DI moves above minus DI with ADX greater than 25, we have a strong buy signal. This indicates increasing upward momentum in a well-established trend. Conversely, a potential selling opportunity occurs when the negative DI crosses above the positive DI, especially when ADX is above 25. At this crossover point, when minus DI rises above plus DI with ADX greater than 25, we have a strong sell signal. This indicates increasing downward momentum in an established downtrend. Traders can also watch for ADX divergence, where price makes new highs, but ADX fails to confirm with new highs, potentially signaling trend weakness. This divergence occurs when price continues higher, but ADX starts declining, showing the trend is losing strength. This can warn of potential reversals or consolidation periods ahead. Another valuable strategy involves using ADX for breakout confirmation. When ADX rises from below 25 to above 25, it can confirm that a price breakout is valid and likely to continue. Here we see price approaching resistance, while ADX is below the 25 threshold. When price breaks through resistance and ADX simultaneously rises above 25, it signals a strong breakout that's likely to continue. When trading with ADX and directional indicators, it's important to remember some best practices. First, ADX is a lagging indicator, so it works better for confirming trends than predicting them. Focus on crossovers that occur when ADX is above 25, indicating strong trends. Watch for divergence as an early warning sign and use ADX to confirm breakouts. Always apply appropriate stop-loss strategies and combine ADX with other technical analysis tools for more reliable trading signals.